The broadcast is now starting. All attendees are in listen-only mode.
Welcome to Optimum Solutions Gross Up 101 webinar. My name is Susan Warren and I'll be your presenter today. And today we're going to spend a little time looking at a very handy tool that can help you when your employer decides to be extra generous in paying bonuses or benefits to employees, a gross up tool. Here's our agenda for today. We're going to look at a definition of gross up and discuss why is gross up an issue. We'll look at the IRS gross up formula. We're going to dig into a basic example of gross up and then get a little more complicated by looking at a gross up example where an employee will cross the FICA wage limit. We'll look at a gross up example where 401k is involved. And last, we're going to look at a couple of examples where gross up takes an employee over the $200,000 taxable Medicare wage limit. It's not an uncommon practice for an employer to announce or promise, if you will, a bonus amount or some other type of perk outside of regular wages, like perhaps assistance with moving expenses or relocation or forgiveness of a loan. And the promised amount is the amount that is the intended net. Now, for our purposes today, we're going to concentrate on bonuses. Everyone is getting a $1,000 bonus. Everyone shouts, hooray! Everyone except payroll. You see, it's not quite as easy as just cutting $1,000 checks for everyone. Because the IRS has this funny notion that if you pay employees any wages, including bonuses, it's taxable. So someone must pay employment taxes on all those $1,000 bonuses. And that's when the IRS's convenient gross up tool comes into play. Gross up is an IRS approved calculation method used to pay employees an increased gross amount that includes taxes in order to arrive at a promised or agreed upon net. And most often we think of gross up when paying a bonus. In our $1,000 bonus case, the employer will have to pay all of the employee's taxes in addition to the regular employer paid taxes. So the gross for the bonuses will have to include all tax amounts in order for everyone's net bonus to be $1,000. But wait, adding tax dollars to the original gross amount, isn't that just increasing taxable wage? Doesn't that mean that there is even more taxable income? Where would this ever end? How come this isn't just making things even more complicated? Well, the IRS has approved the gross up method so that this never-ending tax cascade does not become a problem. And it actually makes the calculation pretty easy if you know the basic formula. And I have it here in red. And you're going to see this over and over today and variations on this formula. But the basic formula is gross equals your desired net pay divided by 100% minus the total percent of all taxes paid. So our first example today is going to be our simplest example. All employees have been promised a $1,000 bonus, which our employer ABC of Tennessee treats as supplemental wages. No employees have yet reached the FICA annual wage limit because it's early in the year. And in Tennessee, there is no state income tax and no local tax. To get ready for our equation, our percent of all taxes will be 22% for federal and 6.2% for FICA and 1.45% for Medicare, for a total percent of all taxes paid of 29.65%. So let's put those numbers into our formula. And here's our formula again. We can balance the right side of the equation first. 100% minus the total percent of all taxes paid. That's going to be 100% minus 29.65% equals 70.35%. And our desired net was $1,000. So divide 1,000 by 70.35. That gives us a gross of $1,421.46. In order to pay all taxes for the employee, the gross needs to be $1,421.46 so that the net will end up at $1,000. Well, let's prove our math. Using the federal 22% supplemental rate, $1,421.46 gross at 22% is $312.72. FICA at 6.2% is $88.13, and Medicare at 1.45% is $20.61. Gives us total taxes of $421.46. Here's our gross up amount minus our taxes. Our net is $1,000. Now that was pretty simple. However, there are other tricky situations that can arise with gross up calculations, and payroll professionals should know how to handle them all. What happens when a bonus takes an employee over a tax threshold like the FICA limit? In this next example, ABC is extending a $10,000 bonus to a senior manager in November of 2019, so it's late in the year. The 2019 FICA wage limit is $132,900. And at the time the bonus check will be cut, the employee's FICA wage will be $127,927. So the $10,000 bonus is going to push this manager over the FICA wage limit. Your first task is to determine exactly how much of the bonus will be subject to FICA tax and how much is excess. How much of the wage limit does the employee have left to meet? So we'll take the FICA wage limit, $132,900, minus their year-to-date FICA wages, $127,927, and that leaves us $4,973 that will be subject to FICA out of this bonus. So we'll multiply that by the FICA rate of 6.2% to get FICA taxes of $308.33. That has to be added to the $10,000 bonus for our gross up amount. So we've got $10,308.33 now for our total gross up amount. Okay, so I've just carried that forward to this next slide. Now we're going to apply that original IRS formula for gross up. Gross equals desired net pay divided by 100% minus the total percent of all taxes paid. The percent of all remaining taxes, because remember, we've already taken FICA into our calculation. So we leave FICA out of this total of all taxes paid. Our remaining taxes are 22% for federal and 1.45% for Medicare, for a total of 23.45%. So 100% minus 23.45% leaves us 76.55%. Gross equals desired net pay $10,308.33 divided by 76.55%, or 13,466.14. In order to pay all the taxes for the employee, the gross needs to be $13,466.14, so that the net will end up at $10,000. And let's do our math to prove that. Federal at 22% is $2,962.55. Remember that only $4,973 remains FICA taxable before the employee reaches the FICA wage limit for 2019. So 6.2% of that is $308.33. Medicare at 1.45% is $195.26. Total taxes then would be $3,466.14, leaving a take-home of $10,000. Now, on this example, let's also look at how you would report the taxable wages and taxes paid just for this particular payment. Your W-2 boxes would look like this. Remember, boxes 1, 3, and 5, your taxable wages for federal, FICA, and Medicare, will not be the same for this payment because FICA taxable will not be the entire gross amount. Only a portion of this gross was FICA taxable because the employee reached the FICA wage limit with this payment. And then, of course, boxes 2, 4, and 6 are your taxes withheld. But this W-2 posting looks a little different. Just wanted to show that to you. Another twist to the gross up calculation happens when employees elect to have 401k withheld from bonus or other gross up amounts because, of course, 401k is pre-tax for federal income tax, but not pre-tax for FICA or Medicare. In this example, ABC is paying a $1,000 bonus to an employee who has elected to defer 5% to 401k. Now, the FICA wage limit doesn't play a part in this calculation, this example, so we're not going to worry about that. The net pay for this employee needs to be $950 because we've got a $1,000 bonus, which is the promised amount. $1,000 is the promised amount. And then we've got to subtract the 5% 401k deferral, which would be $50. So our net pay in this instance will be $950, 1,000 less the 5% 401k, or $950. First, let's figure the FICA and Medicare tax on the 401k deferral. So $50 times 6.2% is $3.10. $50 times 1.45% is 73 cents. And we're going to add those amounts to the amount that will be taxable for federal income tax. So 950 plus 310 plus 73 cents is $953.83. That's going to be our amount for the gross up calculation. And here's our formula again. Our amount for gross up I carried over from that last screen, $953.83. Again, I'm going to start on the right side of the equation by totaling all of my taxes. 22% federal, 6.2% FICA, and 1.45% Medicare gives me 29.65% for all of my taxes. I'll say 100% minus 29.65% is 70.35%. So I'll take my $953.83 divided by my desired net pay, divided by 70.35% equals $1,355.84. This will be the federal taxable amount, and add the $50 for the 401k deferral to that. So $1,405.84 will be the FICA and Medicare taxable amount. So let's check the math on this one. Federal taxable, $1,355.84 at 22% gives us federal tax of $298.29. And then I've also listed my $50 for the 401k deduction. Then my FICA taxable is $1,405.84 at 6.2% for a tax of $87.16. Medicare at 1.45% gives us a tax of $20.39. So my total taxes plus my 401k deferral gives us deductions of $455.84, subtracted from my total gross up amount, gives us a net of $950. That would be a $1,000 bonus minus $50 going to the 401k. All right, next, let's see what happens when a gross up calculation takes an employee over $200,000 in Medicare taxable wages. ABC is added again. I want to work there. Don't you want to work there? This time, they're going to pay a $25,000 bonus to an executive who has already earned $195,000 year to date. That means that the FICA limit has already been met in this case, so we at least don't have to worry about that. But we do have a special formula for this case. Our grossed up amount will be referred to as the variable X, where X minus 0.22X minus 0.0145X minus 0.009 times X minus $200,000 minus the year-to-date Medicare wages equals our desired net. So let's look at that formula applied to our real numbers. Our gross up X minus 0.22X minus 1.45X minus 0.009 times X minus 200,000 minus this employee's year-to-date wages, 195,000, equals our desired net of 25,000. So following the order of operations, you got to put on your math thinking caps for me now. Following the order of operations, do the math inside the parentheses first. So 200,000 minus 195,000 gives us $5,000. Then the order of operations calls for multiplication. So we're going to say negative 0.009 times X. Here's that result. And negative 0.009 times negative 5,000 gives us positive $45. And then we're just going to add our like figures, add and subtract. So 1x minus 0.22x minus 0.145x minus 0.009x equals 0.7565x. And then to balance the equation, we're going to subtract 45 from each side. So the other side of the equation is going to be 24,955. And then we're going to divide both sides of the equation by 0.7565 to get x equals $32,987.44. And that is our gross up amount. Got to remember our algebra for these now. The IRS does publish an approved alternative formula where you don't have to add up all of your taxes. But remember, if you have state or locals, you can't use this figure here on the end because this is only including federal at the supplemental rate, FICA, and Medicare. I'm sorry, it doesn't include FICA. This is assuming they've already met the FICA limit. So here's the alternative formula. It's a little bit simpler. So once again, you would do what's in the parentheses first. You would subtract 195,000 from 200,000 to get your 5,000. And then you would do your multiplication according to the order of operations. So you would say negative 0.009 times 5,000 is a negative 45. And then, according to the order of operations, you would do what's in the brackets. So you would say 25,000 minus 45 equals 24,955 divided by 0.7565. So to solve for x equals $32,987.44, which is the same gross up amount that we saw just on the last slide. Yes, it is a lot of algebra. And we can prove this one just like the others. Take your gross up amount, $32,987.44, times your supplemental federal rate of 22% for federal taxes of $7,257.24. Your regular Medicare would be at 1.45% for a total of $478.32. And then additional Medicare for the portion that is over $200,000, and that's calculated, I've got a note down here at the bottom. Additional Medicare is going to be calculated on the previous year-to-date Medicare wages of $195,000 plus this check's gross up amount of $32,987.44 minus $200,000 for a Medicare taxable additional amount of $27,986.67, and that's times the 0.9% rate, for additional Medicare tax of $251.88. So your total taxes, $7,987.44. Subtract that from your gross up amount, and you get a net of $25,000. And as if that's not interesting enough, there is yet another alternative formula for this instance, where the grossed up amount takes the employee over $200,000 in taxable Medicare wages. 22% plus 1.45 plus 0.9. Remember, there's no FICA here. They've met that FICA limit. It's going to give us 24.3 35. This is all of your tax percents. We're going to subtract that from 100 to get 75.65%. What is left to meet the $200,000 Medicare limit? In this case, we've got $200,000 Medicare limit. The employee has reached $195,000. So what's left is $5,000. Additional Medicare tax on that remaining amount will be 5,000 times 0.9% or $45. Your adjusted desired net will be the net bonus of $25,000 minus the additional Medicare of $45 or $24,955. Then you can use the original gross up formula that we've seen several times already, where desired net pay divided by 100% less the total percent of all taxes equals the gross. 24,955 divided by 75.65 equals $32,987.44. Still talking about an employee who goes over the $200,000 mark for Medicare, here's an interesting twist. What if the bonus amount won't take the employee over $200,000 for Medicare taxable wages, but the grossed up amount will? Oh, there's a formula for that too. ABC wants to pay a net bonus of $100,000 to an employee with year-to-date FICA and Medicare wages of $95,000. Now that would only bring their taxable Medicare wages to $195,000. But when you go through your basic formula, you'll realize that the grossed up amount puts the employee over $200,000. So additional Medicare will need to be applied. Let's look at how we would apply this formula for this specific instance, solving for X, where X equals our gross up amount. So X minus 0.22X minus 0.62 times the FICA wage limit minus the year-to-date FICA wages minus 1.45X minus 0.009 times X minus 200,000 minus year-to-date Medicare wages equals our desired net. So we're going to put all that into our equation. We'll do the things inside the parentheses first. 132,900 minus 95 is 37,900. And then 200,000 minus 95,000 is 105,000. Then we'll do our multiplication. 0.62 times 37, negative 0.062 is negative $2,349.80. And down here, we're going to multiply negative 0.009 times X and negative 0.009 times negative 105,000 to give us a positive 945. And then we'll add up all of our X's and subtract 945 from both sides to give us 0.7565X equals $101,404.80. Solve for X by dividing both sides by 0.7565. X equals $134,044.68. And there's also a shortened version of this formula, much like the last one that we just looked at. Here's the shortened version, but again, remember, if you've got state and local taxes, that's not going to be included here. And you've heard me say enough math today. I'm not going to go through this one with you. This is our last example. So you can follow the numbers and follow your order of operations, do what's in the parentheses first and then do what's in the brackets and solve for X. But it gives you the same example, the same result. And once again, we can prove this result. If we take our gross up amount of $134,044.68, federal at 22%, FICA at 6.2% on the $37,900 that remained to be taxable, the regular Medicare at 1.45%, and then the additional Medicare at 0.9%. And again, additional is calculated on the previous year-to-date wages of $95,000 plus this check's gross up of $134,044.68 minus $200,000 gives us for this check a taxable of $29,044.68, and that tax would be $261.40. All of your taxes add up to $34,044.68, leaving a net of $100,000. I know I mentioned it before several times, but as you look back at your notes and the handout from today's webinar, remember that for simplicity's sake, none of our examples today included any state or local taxes. And if you're in a state with state income tax and also perhaps local income taxes too, and some of you know that you might have even more than one local tax code for an employee, you would always need to include those state and local tax percentages in your figures when you're calculating your total percent of all taxes paid. So just make a note to remember that if you're going to use this handout or these slides for copying these formulas. Thank you for joining us today. We hope you are now better equipped to handle gross up in not only its most straightforward form, but also in some of the more complicated instances where it can rear its head. Please be on the lookout for more of our educational webinars soon, and email me if you have any suggestions for topics you'd like to see in future webinars. Have an optimum day.